Welcome to Globefolio. So, in this video, I'm going to discuss one stock you should avoid for now, at least for now, because the fundamentals of this company is not actually very good. But I'm not asking you to avoid the stock. I'm not telling you to avoid the stock because of the single bad quarterly result. No, the reason I'm asking you to avoid this company is because of the multi-year setups, the multi-year trend of this company. Now, this is a company that had benefited immensely from exchange rates. In short, look at the growth from 8 naira in 2013 up to a high of close to 57, 58 naira. That's almost 600%. So it's normal for you to quickly jump into this company thinking that, oh, this company will keep delivering good numbers. But here is the setup that I found that is not making Better Glass a good company for me. So the company here is Better Glass. Now, the fundamentals of this company wasn't good. The Q1 results was actually below expectation. So, but that's not the reason I'm avoiding this company. So, but before I show you why I don't think this company is one you should hold on to right like that, let's quickly look at the fundamentals of this particular company. Let's look at the recent fundamentals, and I'm also going to share why you should avoid this company for now. So it's not about the daily price fluctuation. Even if this company closed by 10%, 15%, I may probably not buy into the stock except certain conditions are met. So if you own this stock, I'm not asking you to sell immediately, but I want to quickly tell you the things you should watch out for, so you can quickly you know whether you should keep holding on to the company stock or sell off by the time those conditions are met. That way, you don't get caught up in a possible dip. Now, this is the Q1 result of the company in Q1 against Q1 2022 against Q1 2021. So look at revenue from contract with customers. So that's note 6. Now, the company recorded increase from 8 billion to 10.4 billion. So 10.4 minus 8 billion. That's the added additional 2.4 billion, 2.4 billion. So the company recorded 30% increase in top line. That's revenue, 30% increase in top line. So let's look at the breakdown, which is note 6. Note 6. Okay, so this is note 6, 30% increase from 8 billion to 10.4 billion. You can see the type of goods the company sells: glassware and bottle. Now you notice geographical market, local, and also export. So the company also export, but majority of the revenue is coming from local sales and not exports. So you can see there was a dip in export from 597 to 211. You can see right here. And then the local had, so the major driver of the increase in revenue was from local sales. But here's the point: if you check other line items on the company's financials, you will see how cost of sales lowered the profits, like how the increasing cost pressures on companies right now is actually taking a toll on the financials of Better Glass. Look at 5.4 in 2021 to 8.1. So that's like 2.7 divided by 5.4. So over 50% increase. So the company recorded 30% increase in revenue, but 50% increase in cost. So which is why gross profit dipped to 2.2 billion from 2.5. And then look at other item head. You can see in terms of expenses, the company is actually faced with increasing cost pressures. They are they paid more in 2022 compared to 2021, from selling admin expenses to admin expenses. And you can see even other income also dipped, so even down to a loss of 10 million naira. And then operating profit dipped from 2.2 down to 1.6. Foreign exchange loss expanded significantly to 179 million from 51. And then you can see the finance costs, actually a bit of reduction, finance income increase, but in overall that didn't support the company's profit. So rather, profit before tax dipped to 1.5 from 2.2, and then you see profit after tax also follow the same path. So you shouldn't be surprised that basic earning per share also dipped to 2 naira from 3 naira. So this is not an impressive result. So what do you think management should be looking at? Management should work on reducing costs, or rather they should probably increase price, because the only way you can survive a high inflationary environment like Nigeria right now as a company is for you to increase price. You can't reduce your cost to the extent of not marketing. Definitely, you want to put your product in front of customers. You can also reduce your cost to the extent of not paying staff salary. So there's an extent to which you can cut costs. So the best way to bounce back is for you to increase the price of your product. But I see that most companies in Nigeria, rather than increasing the price of their product, they're even reducing the quantity. So you may not even feel the effect of the rising price, but rather the quantity has actually reduced. So that's what most companies are using. A perfect example of company that is doing such is USCN. Go buy Gala out there, you will see the new Gala. It's not even anything to write home about, but the price of Gala is still the same, but rather they are trying to reduce the cost, the quantity of Gala you consume or produce, so that it can actually make more money. So that's the financials of Better Glass, which is not impressive. But is this the reason I'm asking you to avoid the company? Capital? No. I don't use one single quarterly report or result to take buy or sell decision. What I use to take my buy or sell decision is the trend of the stock. So let's go back to chart. This is a chart of Better Glass. I've marked two important key levels on this chart. In short, it's likely going to be three from the top level of 87.86. So I have one important key level at 87.86. I have another key level at 52, between 50 to 52 region, and then I have my third key level at 28.58. These are three important key levels that would determine the direction of this stock. So let me discuss why I think you should avoid this company right now. So notice how the company dipped from rallied from 8 up to this key level right here, which is 28, pulls back and then broke this region. From then it went as high as 51, dipped again to 28, back to this important region, broke this level, pulled back. So this was previous resistance, then became support, then rallied higher to 86. Now look at the trend between 2018 down to 2022. I want to show you one important trend that I don't like about this company. Remember, if you have watched my videos, if you have followed my video, I always talk about market structure and how that the market structure of a stock, it's enough for you to know whether a company is in a company stock is in an uptrend or downtrend, so you can take decision in line with that trend. Now, market structure is characterized by higher high, higher low if the stock is going up, or lower low, lower high if the company is coming down. So the first thing we want to look at in Better Glass stock is the market structure. What is the market structure of this company stock saying between 2018 down to 2022? Look at the price. The last high it was 87.88.86. The company dipped to this important key level. Please note this 50 to 52. Then it went as high as 78, which was lower low compared to 86. Now look at the it dipped back to this important region, went again as high as 75, which is lower than 78, which is also lower than 86. Then it dipped from there back to this 52, 50, 52, then rallied high again, which is 70. Now notice the gradual lower low. Now 70 is lower than 74, 74 is lower than 78, 78 is lower than 86, and from there it dipped further again to a low of 50, 52, 53. And right now you can see how the stock rallied back again to 58. 58 is lower than 68, 68 to 60, that's 68 to 70, which is lower than this, which is lower than this, which is lower than this. So between 2018 to 2022, this company has been forming successive lower high. And lower high is a very strong sign that the trend of this stock is going down, despite the fact that we've seen how 52, 58 had acted as important support, meaning that anytime the company share dips to 52, 50, between 50 to 52, buyers tend to steps in. But at the end of the day, you will see that they fail to take the price above previous high. So with the formation of lower high year on year from 2018 down to 2022, it's a sign that better glass might be on a path to downtrend, on a path to massive crash. Now, if you add that to the bad fundamentals, it tells you that management have a lot of work to do. If management do not work on revamping the financials, if they don't work on delivering better results in Q2, I bet you if better glass dips below this important 50-52, you can see how this level had been an important support region between 2017 up to 2022, which is like 5 years. So 50 to 52 had been a major key level. If the stock fails to hold at this level, if it breaks below this because of bad financials, better glass may crash to 28. Better glass will crash to 28. This is like a wall. This is like a floor level. So meaning that anytime it crashes, this region holds back. If it crashes, it holds back. If it crashes, it holds back. Crash it holds back. So if this fails to hold, if buyers can no longer defend the price at 50-52, better glass should be going down to 28. And 28 compared to 50-52, that's like 24, 24 divided by 28. So that's like 85%. So it's better for you to sell at a loss, a minor loss around this region, than for you to see your stock go down by 85% if better glass cannot, if they can't deliver. So you need to watch out for this stock. If you don't own this stock, you might need to avoid this stock. But if you own this stock right now, might not be the time to sell. What you need to watch out for right now is whether the company's stock will dip below 50. If it dips below 50, you might consider an exit. You might consider an exit because a dip below 50, you can see that we do not have any major support between that region. So that opens the door for a bigger crash to 28. Now, on the upside, if this company breaks this downtrend line, you can see the downtrend line connecting the high in each year from 88 attained in 2018 to 76 in 2019 and also 72 in the same 2019 up to 70 in 2020 down to the lowest high of 58 in 2022 if this company breaks above this trend line. So one of my major price level is this level, which is the 50 days moving average. That's the 15 months moving average of 60-62. So except a break above 62, now might open the door for bigger rally back to 87-88. So what management needs to do right now is if they want to see the share price rally back to where it's coming from, then the financials, the Q2 result of better glass needs to break expectation, need to beat expectation. In short, the company needs to turn their financials around completely, or else if they deliver two consecutive um results that are not bad, that are not good, or consecutive bad results in Q1 and Q2, then that might open the door because I'm sure a lot of investors will dump the company stock and it should go down to 22. So please, if you hold better glass stock, watch out for 50-52 key level. That's the point. That's the risk level you might consider an exit on this company stock. But if the company fails, as long as price is still above 50-52, then you might still consider a hold and watch out for a level above 60. So my risk level on this stock is 50-52, while also looking at 62 as a major buy point. So the major turnaround right now on this company is if the share price breaks 50, 60, 60 naira and then rally to 63-64, then that might change the whole trend, meaning that we may not see a crash to the downside. But this can only happen if management delivers better than expected results in Q2. So please, if you hold better glass, kindly note this video. Make sure you follow the analysis shared in this video. But if you don't hold better glass, you might probably need to stay off this company. This is the reason why you need to subscribe to this YouTube channel and turn on notification button so that when I drop videos, you will be among the first people to get my analysis of each of the stocks. Who knows, one of the stocks you own might be here. Who knows, someone that has been holding better glass thinking that the share price will rally, and what happened? might compliment this video might just save you from that loss that you might incur. Let me share the last thing again. You can see the death cross, the bearish cross from 20 months crossing the 50 months to the downside. This alone is even a confirmation to what I just shared earlier. With the 20-month moving average, when a shorter duration or short range moving average crosses below a long range moving average, it's always a sign that the market is not really happy with the company's stock. And you can see with the 20 crossing the 50 to the downside, so we might just see a brief pullback and finally the company share will crash. But I'm not saying better glass will crash to 28. I'm only telling you what will happen if the price breaks below 50.52, which has been one major key level to watch out for. So the most important key level you should be watching on this company stock is 50.52 naira. If 50.52 cannot hold, then sell this stock and leave. But if 50.52 can hold, then we are still hopeful that the company might rally above 60.62 naira. But that will only happen if future results of better glass comes out better, or if it's actually very impressive, meaning that management is able to increase price of its product to cover increasing cost. Like you can see from the fundamentals here, the biggest problem this management had right now is increasing cost pressure from direct costs to indirect expenses. You can see selling and admin from 50 to 54 marginal, but look at administrative expenses from 439 to 620, and then you can see other income in 2021, it was in profit. They actually generated profit from other sources, but this year they incurred a loss. So these are the major problem management has to revisit and make sure they provide solution to. Or else, if they don't do that, this company might be on a verge of crashing to 28 naira. So I hope you understand this why you should avoid this stock, and I hope you got value from this video. If the analysis makes sense to you, kindly hit the subscription button, turn on the notification bell so that when I share a post or when I drop some stock analysis, you would be among the first to get notified. Thank you.